If you're diving into the world of dividend investing or just considering dipping your toes in, grasping the concept of the dividend snowball is crucial. It's the secret sauce to watching your cash stack grow bigger over time. Getting rich off dividends isn't just a dream. It's totally doable if you understand how to play the long game. This whole snowball thing is a big deal because, in the beginning, the slow pace of growth can be a real buzzkill. Imagine you're psyched about the idea of passive income from dividends, dreaming about cashing those checks to jet set around the globe. So, you jump in with $500 and snag some shares of a classic like Coca-Cola. With that investment, you're looking at owning around 8 shares. And with Coca-Cola dishing out 48.5 cents per share quarterly, your pocket change adds up to $3.88 every 3 months. Break it down monthly, and it's not exactly life-changing money. Here's where a lot of folks hit a wall. After a few months of minimal action, the temptation to chase the high-flying tech stocks like Nvidia or Microsoft gets real. Everyone around you is talking up these hot stocks, riding the hype train, and you start feeling that fear of missing out. It's common to see folks jump ship from their steady Eddie dividend earners to try and catch a ride with the more glamorous growth stocks. For those who can play the long game and stick with dividend investing, ditching the temptation to throw cash at the latest overhyped tech stock, there's a serious payoff. There's this myth floating around that you need a mountain of money to live off dividends, but that's far from reality. Achieving the dream of funding your lifestyle with dividends, or at least padding your income with them, hinges on mastering the dividend snowball effect. So, what's this snowball thing all about? It's all about compounding your gains by plowing your dividends right back into buying more shares. Picture rolling a tiny snowball around in the snow. It starts off small but grows massive over time. That's your money when you reinvest your dividends. Let's break down what we mean by the dividend snowball. It's all about leveraging compounding to turbocharge your investment returns. Essentially, by reinvesting the dividends you earn into purchasing more shares. This process mirrors rolling a snowball in the snow. It starts petite but grows exponentially over time. This approach demands a commitment to reinvesting dividends back into buying more of the same stocks or funds. It's a strategy that can be employed across various brokerage platforms, whether you're working with established giants like Schwab, Vanguard, or Fidelity, or modern platforms like Robinhood or Moomoo. These platforms offer the flexibility to manage your dividends in a way that suits your investment strategy best, typically offering the choice between pocketing your dividends as cash or automatically reinvesting them to buy more shares. The beauty of the snowball effect in dividend investing lies in its simplicity and power. Over time, by continuously reinvesting your dividends, you're not just earning on your initial investment but also on the reinvestments, leading to an accelerated growth rate of your portfolio. This method ensures that your investment base continually expands, allowing your passive income stream from dividends to grow progressively larger. It's a strategy that emphasizes the virtue of patience and the power of compounding, setting a solid foundation for financial independence and the possibility of a secure, dividend-funded lifestyle. When you choose to reinvest, you're essentially funneling every cent of your dividends back into purchasing more shares of the very stock that just rewarded you. If your dividend payout isn't quite enough to snag a full share, don't sweat it, your platform's got your back, automatically securing you a piece of a share to keep the ball rolling. Opting for reinvestment is a no-brainer if you're not yet relying on dividends to keep the lights on, allowing the dividend snowball to kickstart its magic from day one. Diving into dividend investing might have you feeling impatient at first, especially during those initial years where visible growth seems like a trickle rather than a flood. It's a tough spot, particularly with a slim investment pool. Yet, the silver lining is crystal clear. Stick with it, and you'll watch your returns pick up speed and heft with each passing year. With each dividend reinvested, the next payout inches up, painting a brighter picture for your financial future. However, even as you're knee-deep in the grind, taking a moment to gauge your progress and forecast your financial horizon is wise. Witnessing the dividend snowball effect in all its glory, especially if you're relatively new to the game or working with modest sums, can be hugely motivating. This is where a dividend reinvestment calculator becomes your best friend. Tools like the one on TipRanks serve up a realistic peek into what the coming years could hold for your portfolio, offering a mix of motivation and strategy planning. Remember, these forecasts lean on historical performance, so while they're not a bulletproof prediction, they're about as close as you can get to sketching out your financial journey's potential trajectory. Diving into the world of dividend investing with a practical example, let's zoom in on Realty Income, a company well known for its monthly dividend payouts. Imagine you've got $10,000 to invest in Realty Income, and you're planning to let that investment sit and simmer for a hefty 30 years, without pouring in any extra cash along the way. For simplicity, we'll skip the tax talk, as the specifics can vary based on your locale and whether you're stashing this investment in a retirement account or a regular brokerage account. Realty Income has historically boasted a 4.3% annual compound dividend growth rate since it made its debut on the stock market. However, recent hurdles like the pandemic and high interest rates have thrown a wrench in the works, slowing things down. For the sake of being conservative, let's dial our expectations way down and assume a modest 1% annual growth in dividends alongside a 5% annual uptick in the stock's price. With a $10,000 initial investment in Realty Income, your annual dividend haul would start at about $614.69. It might not sound like a fortune, especially considering the size of the investment, but here's where the magic of compounding, or the dividend snowball, begins to shine. By choosing to automatically reinvest those dividends, letting them drip back into buying more shares, your dividend income starts to build momentum. Hitting the Calculate My Returns button on this hypothetical scenario reveals that, after 3 decades of letting your investment ride and continuously reinvesting the dividends, your annual payout could balloon to $1,846. This growth isn't just due to the company potentially hiking its dividends over time, but also because of the power of reinvesting those dividends to grab more shares. Scrolling through the results, you'd witness firsthand how the snowball effect propels your yearly dividends upward as time marches on, illustrating the potency and appeal of sticking with a dividend reinvestment strategy over the long haul. It all starts with a slow crawl, but as you stick with it, the pace of dividend growth hits a thrilling speed, to the point where you're banking an extra few $1,000s each year. Now, let's tweak our strategy a bit to see how we can boost those future earnings, keeping all else constant but adding an extra $5,000 to our investment annually over the next 30 years. The difference is stark. Commit to that annual boost, and the numbers tell a compelling story. You could be looking at $117,000 in dividends after 3 decades. And remember, this projection is on the conservative side, especially when stacked against the historical performance. However, it's key to remember that banking on a single stock is like putting all your eggs in one basket. A smarter move is to spread your investments across a mix of stocks and ETFs. This diversification strategy is your safety net, ensuring that even if one investment takes a hit, you've got others to fall back on. And for those eager to dive deeper, tools like the one on trackyourdividends.com offer a wealth of insights. It's a robust platform that allows for meticulous portfolio tracking and forecasting, all without a dime spent on subscriptions unless you opt for premium perks. This tool not only lets you manually track your investments, but also syncs with your brokerage for real-time updates, providing a clear picture of your monthly and yearly dividend income. What's more, its future value feature paints a vivid picture of your portfolio's potential growth over time, underlining the sheer power of reinvesting dividends. This approach, the dividend snowball method, has been a cornerstone of investment giants like Warren Buffett. It's a testament to the method's efficacy, with Buffett himself reaping billions annually from his stock holdings. In essence, this exploration into the dividend snowball method sheds light on its mechanics, its long-term benefits, and just how transformative it can be for your financial future. Alright, team, we've just unpacked the powerhouse strategy of dividend investing and witnessed the undeniable magic of the dividend snowball. Remember, whether you're just starting your journey or you're looking to optimize your existing strategy, the key takeaways are crystal clear. Start as early as you can, stay committed, and let compounding do the heavy lifting. If today's dive into the world of dividends has sparked your interest or lit a fire under you to get more serious about your investment game, I'm throwing down the gauntlet. Head over to those dividend calculators we talked about and start playing with the numbers. Tweak, adjust, and plan. See for yourself how even small, consistent investments can snowball into a mountain of wealth over time. Don't just take my word for it. The proof is in the pudding, or in this case, in a snowball. Whether you're a fresh-faced investor or you've got a few years of experience, there's no time like the present to start building your dividend empire. And hey, while you're at it, why not spread the wealth of knowledge? Share this video with someone who could use a little nudge towards financial freedom. Let's get the conversation going and build a community of savvy, dividend investing pros. Hit that like button if you found today's video insightful, subscribe for more finance wisdom bombs, and drop a comment below with your thoughts or what you'd like to see next. Remember, we're in this together, growing our wealth, one dividend at a time. Catch you in the next video.